There's a major legal showdown happening over weight loss drugs, and HIMS is right in the middle of it. Their stock just dropped 35%, so the big question is this a smart buying opportunity, or a warning sign? Let's break it all down clearly and calmly. What actually happened back in April? HIMS announced a partnership with Novo Nordisk, the company behind Wegovy, a popular weight loss drug. Fast forward 2 months, and Novo just ended that partnership. Why? Novo Nordisk is accusing HIMS of illegally compounding and selling copycat versions of Wegovy. Here's the timeline. In February, the FDA said Wegovy was no longer in shortage. That triggered a ban on most compounded versions of Semaglutide, Wegovy's active ingredient, by late May, but HIMS kept selling personalized Semaglutide-based weight loss kits anyway. Novo says that violates FDA rules. HIMS says otherwise. But the market clearly didn't like it. HIMS dropped 35%, and Novo slipped around 6%. Why it matters in 2024, HIMS pulled in about $200 million from these weight loss products. That's around 13% of their total revenue. But this category is booming for them. HIMS expects to generate $725 million from weight loss drugs next year, which would be nearly 30% of their total revenue. So even if it's not a huge chunk today, it's a big part of their growth plan moving forward. They're not a one-trick pony. Here's the breakdown. 1. Mental health services, over 125,000 active users, fast growth, around $100 million in revenue. 2. Sexual health products, their biggest segment, roughly $400 million annually. 3. Skincare, dermatology, makes up about 13% of revenue. 4. Hair care, brings in around 10%, though growth is slow. So yes, weight loss is their hottest product line, but it's not their only one. What's the worst case scenario? Here's what could go wrong. 1. Legal action from Novo or the FDA. 2. Fines or sales bans. 3. Losing a major portion of that fast-growing weight loss revenue. 4. Damage to investor trust, since no one likes investing in companies under legal fire. Now, let's be clear. Right pointing finger emoji, these are accusations, not proven facts. Right pointing finger emoji. HIMS has over $1 billion in cash, and the rest of the business is solid. No, the company's not going bankrupt. But yeah, this could definitely slow them down. What about Novo Nordisk? Novo's just fine. 1. Their partnerships with Ro and LifeMD are still solid. 2. Their sales growth remains strong. 3. The 6% dip was more of a knee-jerk reaction, not real damage. They'll be okay. Can HIMS recover? It's possible. They could. 1. Pivot to selling branded weight loss drugs. 2. Develop other treatments for sleep, heart health, or wellness. 3. Use their strength in AI-driven personalization to hold onto market share. So while this setback hurts, HIMS isn't out of options. Chart breakdown. Now let's look at the stock chart. 1. It just fell below the 50-day moving average, which is bearish. 2. But it's still above the 150-day moving average, which shows some long-term support. 1 concern, trading volume on the drop was massive, bigger than the spikes we saw during earlier rallies. That usually signals strong selling pressure. Some traders are buying call options, but most of them are aiming at conservative price levels. So there's some optimism, but nothing wild. How I handle moves like this? Here's a personal rule I stick to. Right pointing finger emoji. Every stock I own has a stop loss. Right pointing finger emoji. I never lower it, I only move it up as the stock climbs. If it hits my stop, I sell. Even if it bounces back later, I don't second guess the decision. What matters is, did I follow my rules? Did I protect my gains or minimize my loss? Because in the long run, that's what builds consistent success. A word about FOMO. It's easy to think, this thing just tanked, maybe it's a bargain. But here's the truth, we don't know how this lawsuit will play out. We don't know what the FDA will decide. We don't even know how long it'll take. There's a lot of uncertainty here. And that means a lot of risk. There are always plenty of stocks out there with clean charts, steady growth, and no legal issues. You don't need to chase the one in the headlines. The best returns usually come from the boring, steady companies nobody's talking about. Not the ones dealing with lawsuits and FDA drama. So bottom line, if you're investing based on headlines or hype, Stop. Stick to clear rules. Manage your risk. Don't get emotionally attached. That's how you stay sane in this game.